Numbers just were released this morning by Statistics Canada showing that the GDP for the month of November was essentially unchanged. Senior business reporter Peter Armstrong is joining me now. Peter, it's been a fast and flying day here. GDP numbers, though.
Well, and they all fit into the same story, right? Like you look at the GM story, you look at the threats to Canada's aerospace industry, you look at the state of the Canadian economy. I think everybody understands is pretty weak. We expected that weakness to not just be in place through November, but to continue all the way through to the end of this year and into 2027. The question was always, is it going to be just a little bit above zero, a little bit below zero? In this case, it's essentially zero. It's flat. The interesting thing, though, is less that it was flat in November. StatCan also provided the preliminary numbers for December, which tell us that the economy grew, but only ever so slightly by those preliminary estimates, by 0.1% December. So now we can put all of that together and look at what's the state of affairs for the fourth quarter ending 2025. And you take, October was down 0.3%, November was flat, December looks like it's going to be growth, but only by a little bit. So it's likely at this point the Canadian economy contracted again for the fourth quarter. So that sets up a whole new debate heading into 2026. And what does this mean for, growth going forward? Does it mean that we're back on recession watch? A recession, of course, is just two back-to-back quarters of negative growth. So it's telling, but it's really indicative of the moment we're in. And you look at these numbers, right? Where are we seeing this growth? The weakness. It's primarily focused in those areas that are so trade sensitive.
Right. So then are we to assume that all of this is because of the trade turmoil with the United States, or are there other factors at play here?
Well, it's interesting. The other factors, right? When you strip out manufacturing that fell 1.3%, wholesale trade that contracted 2.1%. Let me just read you this one part. In November, motor vehicle parts and accessories merchant wholesalers fell 12.6%. Now, part of that isn't necessarily the trade war. It's that slowdown in semiconductor deliveries that we've seen throughout the world, right? There's fewer chips going around. A lot of them going to AI. A lot of them are getting, diverted to other products. But it's all sort of part of the bigger trade picture. And if you strip out the more trade-sensitive stuff, retail sales was up. The Canadian consumer has been more resilient than I think anybody expected through this whole period. You go back to the beginning of the tariffs, we thought the first people to contract and sort of guard their money and really sort of stay at home and not do anything were going to be Canadian consumers. Hasn't been the case. Retail sales is up. So it really is. There are other factors to it for sure, but the overwhelming thing that's influencing this is the trade war.